Hello and welcome. You're watching Market Fatafat on ET now with me, Snehisha, and today with me is Shrishti Sharma. And very good afternoon to you, Shrishti. But it's not a good afternoon for the markets clearly because we opened above that 800, the 24,800 mark, but we're struggling to even hold on to the 24,600 mark right now. It's looking rather somber for the markets right now, Shrishti.
Well, certainly, Snehi, second straight day where we are seeing heavy losses on the benchmark indices, but the key to track will be the second half because, Snehi, just yesterday it was a stellar recovery from the day's lowest point for both the benchmark indices. So let's wait and watch that whether it happens and it follows the course today or not. But indeed, definitely a lot of selling pressure on the markets because in the Nifty 50, just look at the numbers, it's just 7 stocks that are still holding on to the greens, and apart from that, the kind of quantum that we are seeing on the selling side is way much because Adani Enterprise, BEL, SBI, IndusInd Bank being the top losers in Nifty 50, and the declines are more than 2%. But in comparison to that, or in contrast to that, there's not even a single stock in Nifty 50 that is holding on to a gains of over 1%. That's about the large caps, but the selling is way intense in the broader market space because look at the small and the mid index of the market where we are seeing selling pressure of more than 3 percentage points, and even the advances and declinings will clearly tell you the picture. Just 200 stocks, a little over 200 stocks that are holding on to the greens on NSE right now. But I guess the news flow is all around and there are a lot of buzzes in trade today, Snehi, and that's what we're going to highlight in the next 1 hour.
Absolutely, lots of stocks to talk about and tell you what's in fact actually ailing the markets and weighing on the indices. But as we do that, let me welcome on board our technical expert for the day. We have Laxmikant Shukla, technical analyst of institutional research at Securities India, and from our research team we are being joined by Ria today. Thank you so much for taking the time out joining us, but let's get kick started on the show. And the first stock that I want to highlight is a high flyer in fact in today's trade, and more so it's surprising because the market is tanking away, but this stock is holding up pretty smartly, and the one I'm talking about is City Union Bank, and this is on the back of a very stellar set of Q2 numbers coming in, and you also have a brokerage note that is cheering this stock going ahead as well. And for City Union Bank, if you take a look at these numbers on a consolidated basis, net interest income has come in at 582 crores compared to 538 crores, which is up 8.2% year on year. Net profit is also at 285 compared to 281 crores, which is an uptick of 1.6%. But the real winner over here is the asset quality, and that is what is done pretty well because you have GNPA and NPA that both have improved. GNPA has come in at 3.54% compared to 3.88%, an improvement of 34 bips. Sequentially, NNPA also at 1.62% compared to 1.87%, an improvement of 25 bips sequentially. Now you have a note coming in from Macquarie. They've maintained an outperformance rating with a target price of 185 rupees. They say that PAT was largely in line with what they were expecting. The growth engine has finally turned on for this company, and they expect the ROA to remain between that 1.5-1.6% range despite higher credit costs, and they also expect steady recoveries in the ROA to remain at current levels despite a credit cost increase. This is a note coming in from Macquarie. Good set of results and bullish brokerage note. The stock is up almost 13% as we speak.
All right, City Union Bank flying high in today's trading session, but one of the auto counters that is under pressure is indeed TVs Motors, but it is also a result candidate because the results due tomorrow. But what we are expecting on the result front is steady margins and a double-digit growth on their profit as well as revenue figure. If we talk about the revenue, it could be a jump of 14% sequentially, and 534 crores is what we are expecting. EBITDA expected at 1,083 crores, and the margins expected to be held steady at 11.4%. On to the profit figure, 669 is what we are expecting at ET now, and that will be a growth of 16% sequentially. But apart from the numbers, because do note that the volume jump has been quite substantial, not just on a YY basis, but also on a YY basis. So I don't think that there could be much disappointment onto the number front. But the key to watch actually will be the management commentary, because that's been denting all these auto stocks in the recent while, especially after Bajaj Auto's commentary. If we talk about TVs Motors, then they do also have a similar exposure wherein exports have been doing fairly better. Domestic sales, all eyes on the festive season sales. So the commentary on that will be really important to watch out for, as well as the demand trajectory on their export outlook as well. So that was TVs Motors, but for today the stock is down.
Okay, so that stock is down in today's trade, but on the technicals now, Laxmikant, you picked out Godrej Consumer Products for us. Now, if you take a look at the entire FMCG pack so far, earnings have not been that great. And when you talk about this stock particularly, last 1 month the stock has given negative returns of 10%. So, do you believe after this slight consolidation we've seen now, the stock can turn around and it's time for a pickup?
Good afternoon to you all, and thank you for calling on your show. Now, talking about Godrej Consumer Product, this stock has seen a rising trend line breakdown below its 200 DMA with the formation of lower tops and lower bottom. And last few days, this stock is sliding below all its key moving averages. Even indicator oscillator are moving on the downside. So I am expecting some more correction in this stock. So one can sell this stock around the current levels within the zone of 1305 to 1310, and from there we could expect the downside target of around the levels of 1260, and till it holds below the levels of 1345, view remains negative, and we could expect that this stock could retest its previous levels of 1260 in the upcoming sessions.
Alright, that was GCPL for you all. But moving on, and Ria, take us through the first stock that you wish to highlight, and that is Bajaj Housing Finance. Tell us the latest news flow out here.
Yes, so Bajaj Housing Finance has come out with its Q2 FY25 numbers. Now the net interest income has gone up around 13% on a year-on-year basis to rupees 713 crores. Even the net profit has gone up around 21% over the previous year to rupees 546 crores, although there has been a slight decline in the disbursement side. Now they've also maintained the AUM momentum with a 26% growth this quarter to more than rupees 1 lakh crores, and there has also been an improvement in the net interest margin up to 4.1% in this quarter versus 3.9% sequentially. So overall a decent set of numbers, but the stock is trading on a flat note, down around 0.3% right now.
Okay, so that's the reason Bajaj Housing Finance is in focus on the back of its earnings. Laxmikant, you picked out ICICI Prudential Life Insurance for us on the charts. Now, it's been a decent show for this stock, in fact, on YTD basis or 6 months if you take a look at that. What's the view going ahead on the charts?
See, this stock has given falling channel breakout on the daily chart. Even if you look at the weekly chart, after 2 weeks of fall, this stock has rebounded from its lower level of 720. Now it is again consolidating near its falling channel line. So I am expecting this upside momentum on the upside, and even this stock has reclaimed all its key moving average. Although in today's session we have seen some sort of profit booking, but still it is consolidating above its middle band of Bollinger. So I am expecting upside move in ICC Prudential. One can buy around the levels of 730 to 742 with the target of 720, and keep the strict stop loss of 720 on the closing basis.
Alright, that's about ICICI Prudential. Which levels to watch out for in the times ahead? But with this, viewers, it's time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere, we'll be right back. Welcome back to Market Fatafat, and let's keep it going with all the buzzers in trade right now. And Laxmikant, I'm coming to you for your next stock, and that is Wipro indeed, because after the earnings, the stock was seen to be flying high, but I guess we have snapped in that line with Laxmikant, so we'll try to get back on that. But meanwhile, Snehi, let's put the spotlight on Jana Small Finance Bank.
Absolutely. Let's talk about what Jana Small Finance Bank is doing in trade today, and it's a big loser today because the numbers are not at par with what the street was expecting. 8.5% lower is what the stock is right now as well. Let me just quickly run you through what these numbers look like. Net interest income has come in at 594 crores compared to 526 crores, which is an increase of 13%. Operating profit also up 6% year on year. However, it is the provisions figure that has ailed these numbers this time around, because they've come in at 210 crore rupees compared to 160 crores this time last year, which is a massive uptick of 31% on a year-on-year basis. And on the flip side, you also have net profit that has actually gone down at 97 crores compared to 123 crores, which is a downtick of 21% on a year-on-year basis. If you take a look at the advances and deposits, they have logged in 18% and 31% growth, but what did not do well was the asset quality, because GNPA has come in at 2.97 compared to 2.6% sequentially, so that has worsened. NNPA has stayed constant at 0.9%. Return on assets have gone down. You have NIMs that have slipped this time around. Net credit cost has gone up. So not much has worked out in the bank's favor this time for quarter two. And on the back of that, the stock is ailing more than 8.5% lower in today's trade.
That's about Jana Small Finance Bank, but we also spoke with the management wherein Mr. Ajay Kanwal, MD and CEO of the bank, shares the outlook on the NIMs and the NPAs going forward. He also expects recovery to be higher in the second half. Let's go across and listen into him.
I feel that the net interest margins will improve in the second half because our unsecured book has degrown. Given that we have seen the peak of our MFI stress in the first half of this year, we would not need so much, if at all any, additional provision in the second half. But what our viewers should expect, our net NPA will remain 1%. That will be a base condition. Now, this transferring these collectors to deeper buckets where they originally came from will result in higher recoveries in the second half. So second half, you should see lower provisioning and you should see higher recoveries.
Okay, that's the word coming in from the management of Jana Small Finance Bank. But Laxmikant, you've picked out Wipro for us on the charts. Now, quarter two seemed like a decent set of numbers for Wipro, but on the charts, the stock has been doing well of late. In fact, so what's your view going ahead as well? Do you expect this momentum that we've seen at least in the last 1 year or a YTD basis for the stock to continue?
So definitely looking at the chart, this stock has given symmetrical triangle breakout and near the levels of 555 to 560. They're facing some little bit of profit booking. But in my sense, I think that the consolidation within the band of 540 to 545 will give much impetus to break the shackles of 560. And from there, we could see accelerating in the buying momentum toward the levels of 585 to 590. So I think from the current levels, as the stock is still consolidating near the foot of the falling trend line, so we could expect upside momentum in the stock. And once it crosses the levels of 560, then we could see strength in Wipro toward the levels of 590. But anyone can go long at current level due to the favoring risk and reward ratio. So one can buy around 540 to 546 zone with the stop loss of 520 and can expect the upside momentum of 590 in the stock.
Alright, that's about Wipro, but moving on, let's put the spotlight on what Dr. L Pathlabs is doing, because this stock today had a brokerage note wherein Nomura has come out with a note while they maintain their buy rating with a target price of 3,720 rupees. What they're highlighting is that it's been a steady performance despite a modest seasonal demand for Dr. L Pathlabs. The Q2 is a seasonally strong quarter for the diagnostic industry, driven by the rise in the acute ailments. They had a relatively high base last year with strong flu and dengue season. Now the incidence of dengue is relatively lower in FY25 and especially in Delhi, and that must have impacted the numbers a bit. But for now, they are continuing their buy stance on this one with a target price of 3,750 rupees. And in the market like this, the stock is still holding onto the gains of 0.6%.
Okay, so at least in the green is where Dr. L Pathlabs is right now. But Laxmikant, you've picked out Dr. Reddy's for us. This stock has been a very slow mover. It's been moving, but it's been moving very slowly and steadily. What kind of momentum are you seeing for the stock going ahead? Do you think this pace of movement is going to continue, or can we expect to see some pickup here?
Following witnessing the high of 7,107, this stock has seen consistent decline. But last few weeks, this stock has been taken support from its 20-week moving averages. And on the daily chart, the stock is forming a double bottom kind of structure. And from last few days, this stock has trading in the sideways range of 20 and 50 DMA. So I think once it reaches the levels of 6,770, then we could see a further higher momentum in the stock, and then we could see higher levels toward the zone of around 7,100. So I think that would be the good buying if we buy it from the current levels, and expect the target of 7100. And in that case, if we see any decline, then the levels of 6480 would provide caution in the stock and could act as the strong support. So I am expecting buying momentum in Dr. Reddy for the target of 7100.
Alright, those are the levels that you should watch out for when it comes to Dr. Reddy's. But Ria, let's talk about Mahindra Logistics. Tell us, why is the stock in focus today?
Yes, so Mahindra Logistics is in focus on the back of its Q2 FY25 numbers. Now the stock is down almost 5% today since the numbers did not meet the expectations of the street, since they were expecting better growth in this quarter. Now the revenue has gone up around 11.5% on a year-on-year basis. Even the EBITDA has seen a growth of almost 24% over the previous year. The net loss has come in at 10 crores this quarter versus 15 crores last year. And on the margin side as well, we've seen a growth of around 44 basis points, coming in at 4.4% this quarter. Now going forward, the growth in volumes is going to remain key as the express business moves towards an EBITDA break-even. And the management has also commented on the results, saying that they believe H2 is going to be stronger, which is largely going to be driven by the festive peak and the impact of the margin improvement programs that they're conducting across all businesses. So we are keeping an eye out on Mahindra Logistics on the back of these numbers.
Okay, so Mahindra Logistics also poor set and down and out in today's trade. But let's shift focus and talk about an earnings that we saw coming in just a few hours ago, and that is Paytm. Now, revenue for the quarter declined by 34% from the same quarter last year to 1,660 crores compared to 2,519 crores. Now, remember, Paytm has reported a net profit of 930 crores during this quarter compared to a net loss of 290 crores during the same period last year. But what's key to note is that the company's net profit was aided by a one-time gain of 1,345 crore rupees, which was due to the sale of the movie ticketing business to Zomato. Paytm would have reported a net loss of 415 crore rupees, excluding this one-time gain, if you don't take that into account, which would have been higher than the loss it had reported during the same quarter last year. And this is actually what is weighing on the street this time around. For the September quarter, Paytm's gross merchandise value also increased by 5% sequentially. The management expects this trend in the GMV growth to continue, accelerating in the current quarter itself due to the festive season. Paytm has also provided a default loan loss guarantee to the lending partner, and on the back of this, in fact, on the back of that one-off, if you ignore the one-off and the net loss is widened, you have 3.7% lower is where Paytm is.
Alright, that's about Paytm. Why after the earnings this stock is under pressure today. But Laxmikant, let's talk about BYON and take us through what are the levels that you're tracking on the technical front.
The BYON has given a bearish head and shoulder breakdown with the bearish crossover of 20 and 50 DMA. And after giving this breakdown, the stock has been trending lower with the formation of lower tops and lower bottom. Today it has also breached the neckline of the bearish head and shoulder, which is placed around the levels of 335. And from there we have seen consistent decline. So I think pressure would be continue in this stock, and even one can take short position in BYON for the target of 300 on the downside and keep the strict stop loss of 345.
Levels to watch out for on BYON, but let's talk about Ola Electric. Rihanna, this stock seems to be holding on to the positives today. Tell us why that is happening.
Yes, so Ola Electric is in focus once again since they've responded to the show cause notice from the Central Consumer Protection Authority, or the CCPA. Now, they have provided information and clarifications requested by the CCPA, and they've also resolved around 99.1% of the 10,644 complaints that they had received as per the robust redressal mechanism. Ola Electric has also emphasized their commitment to the full cooperation and compliance with regulatory requirements, and the company has reassured their dedication to customer satisfaction and regulatory standards as well. Now, remember, the stock had fallen over 25% over the past 1 month amid all of these concerns, but today the stock has jumped up around 4% in early trade today, reacting to this new development. So we're keeping an eye out on Ola Electric on the back of this news.
Alright, that's about Ola Electric, why the stock is in focus today. But Laxmikant, take us through Crompton Greaves and tell us how are you spotting this particular stock on the technical front, and which are the levels that you're looking out for.
This stock has also given breakdown from its bearish head and shoulder pattern with the bearish crossover of 100 and 200 DMA. And if we look at the MACD, which is still trading in the negative territory, even the RSI is trading below the 50 mark. So overall, rationally suggests that downward pressure will continue in Crompton Greek. So one can look to go short in the stock around the levels of 405 to 410 and can expect the downside move toward the levels of 373. That would be the probable target of this bearish head and shoulder pattern. And the stop loss which I would like to suggest to keep in the stock, that is 418. Until it hold below this level, the outlook remains bearish and it could continue this downward move toward the levels of 373.
Okay, so those are the levels coming in on Crompton, but let's also hear in from the IRDAI chairperson Debashish Panda. He spoke to the media on the sidelines of the CII Insurance and Pension Summit. Let's go across and listen to what he had to say.
There is another carved out platform which is being created for onboarding the Bima Didis or the Bima Wahaks and for distribution of the Bima Vistar, the parametric or index insurance product. So I'm sure that also will happen very soon. The UAT will start and then we will get it launched at some dignitary will launch that formally. Work is already in progress and a fair amount of work has been completed also. Similar exercise also going to be carried out soon, and then the final rollout plan will be also frozen. Say distribution explosion, we are talking of the hinterland. We are talking of the tier 2, tier 3, tier 4 cities. We are talking of the urban and semi-urban areas. We are talking of the rural areas. तो हमें चाहिए और बहुत सारे distribution models की ज़रूरत है इसमें to take care of, we're talking of 1.4 billion citizens. So, जाहिर है कि उसमें नया मॉडल्स आएगा और टेक लेड मॉडल्स भी आएगा. बीमा सुगम will be the primary driver giving an access to every distributor.
All right, but with this fears, it's once again time to slip into a very short break in this edition of Market Fatafat. Don't go anywhere. We'll be right back with more news and updates.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.